for joining us for a live webinar on breakout trading. This is Stephen Ong, your presenter for tonight's webinar. So we'll be starting the session proper about 7 p.m. So just give some time for the few more attendees who is about to log in and join us. So meanwhile, do scan the QR code that you see on the screen to sign up for the MT5 demo accounts and MT5 trading accounts to try our most advanced trading platform for Forex and stock CFDs. And please read our disclaimer statements, and I will speak to you real soon. Hi, once again, this is Stephen Ong. Right, so for those who just joined us, please do scan the QR code to try out our MT5 demo account, and if you want, you can also scan the QR code for upcoming webinar Phillip Futures. So we'll wait for a few more attendees who's about to join us and log in. So start the session proper at around 7 p.m. Hi, good evening, everybody. Once again, thank you for joining us for this live webinar on MT5 Breakout Trading. Right, this is Stephen Ong, your speaker for tonight's session. So I'm a senior account executive with Phillip Futures and a Phillip investment specialist with Phillip Securities. So before we begin, I'd like to do a sound check. So if you can hear me loud and clear, just type yes in the question box. Right, so also during the Q&A session, so do you have any question, you can type that in the question box, and I'll try to address all of them during the Q&A session at the end of this webinar. All right, so it looks like everybody can hear me clearly. So without further ado, let's begin the tonight's webinar. Right, hi, once again, good evening to those who just joined us. Thank you again for taking time out from your busy schedule to attend this webinar. So for those who just joined in, I'm Stephen Ong, your speaker for tonight's webinar session. And I'm delighted to share the topic which I'm passionate about, and that is trading stock CFD, Forex, commodities market with the breakout trading strategies using the MT5 MT5 trading platform. Right, so for those who are new to trading, Phillip Futures is the first company to introduce MT5 to retail traders in Singapore. So not only is MT5 the most advanced trading platform available in Singapore, it is also completely free to use with zero transaction costs, zero commission charges, and it comes with amazing functionalities and trading features designed especially for retail traders. So MT5 is not only the most sophisticated but also user-friendly trading platform ever introduced in Singapore. So it is specially designed, conceived for retail traders with absolutely no platform fee, no data fees, and most importantly, zero commission. Right, so what are you waiting for? Right, so do remember to scan our QR code end of this webinar and download a copy of MT5 from our website. Right, so this is the topic of the day. Right, so just a brief introduction myself. So my name is Stephen Ong. So as a Forex and stockbroker, I've been awarded for contributions over the years as a CFD specialty with Phillip, and I have been invited by SGX to share my knowledge and expertise about investing and trading with an investor. So tonight my goal is rather simple. So it's to assist traders like you who are interested in developing solid trading strategies, stable to trading interest, risk tolerance, and resources, while remaining flexible enough to capitalize on the market opportunity when they rise. So I hope to be able to provide traders and to all the listeners in this webinar with the market news in a timely fashion, so that when the trading opportunity arise, they are able to capitalize and realize their financial objective while effectively managing their risk. So my aim is quite straightforward. So I want to equip traders and all the audience listening the benefit financially from experience, knowledge, and the enthusiasm in trading, futures, forex, and CFD. And from this, we have developed a working relationship with a better understanding of the factors, events that will affect the markets that are trading, the price movement, and the price action, so that you can benefit financially from this. So for traders who would like to embark on this trading journey with me, do remember to sign up for MT5 account at the end of this session. Right, so hopefully by the end of this webinar, we are able to start on with the win-win business partnership and share many successful trading stories to come. Right, so tonight's proceeding will be as follows. Right, so in the first 5 to 10 minutes, I'll cover the basics of Forex. What is Forex all about? And explain the characteristic, the features, the terminologies of Forex. Right, what are the margin requirements, and how we can calculate your profit and loss, and some of the things that you need to take note of by trading Forex. Right, so after which I'll go through the main topic of the night, that is breakout trading. So I'll explain how to use the breakout techniques to analyze and identify entry and exit signals, and I'll also cover the breakout concepts and trading principle, which is essential to successful breakout trading. Right, so that the trader can utilize these strategies in one of their trading arsenal. And thirdly, if time permits, I do a brief demonstrations on how to use MT5 to analyze chart using the breakout strategy we just covered, right? And also if how to submit orders and how to analyze chart for breakout signals. And last but not least, I'll try to answer all your questions in the Q&A session. So should you have any question, please type them in the question box, and I'll try to answer your questions, all your questions if possible. Right, so the basics of Forex trading. What's Forex trading? Right, so Forex trading is the foreign exchange market, right? One of the characteristics that is electronic OTC where currencies are traded. So OTC stands for over the counter. So what it means is that this forex market is not regulated by any exchanges. It's not like you buy stocks or shares or Singapore shares, right? The shares are traded to the SGX, right, which is the Singapore Stock Exchange. Whereas for Forex market, right, the trades are done electronically, so it's between financial institutions, right, hedge funds, pension funds, portfolio funds, right, and also between retail traders. Right, so every trade is done electronically through your desktop or through your handphone to facilitate trades. Right, so almost all currency that is floated or restricted is available for trading to our platform MT5. Right, so the other characteristic is that it's the largest and most liquid market in the world. So if you trade the market, you should know that the FX market is the biggest, bigger than any stock market in the world. Right, so this is confirmed by the daily average traded value, right? It varies from about 5 to 6 trillion US dollar, right, per day. So this is the average volume that's been traded daily in the Forex market. So another convenience of trading Forex is that it's almost a 24 hours market. So except the weekend whereby the banks are closed, right? The fund managers are on leave, right, on the weekends. So most of traders, they can trade from 5.5 days, right, almost 24 hours a day. Okay, so these are the terminologies that what I call the Forex jargon that it helps to be for the traders to be familiar with, especially for the new beginners, right? So when you're trading Forex, just take note that they are traded in pairs, so it's always one currency versus the other. So as you see from the screen, you have the EUR versus the USD, which is the Eurozone currency, which is traded against the US dollar, right? So it's always in pairs, either Euro dollar versus USD, or you have the pound sterling versus USD, etc., etc. Okay, so these are the more common pairs. So you have other exotic pairs which have different combinations, okay, based on the currency pairs that the traders are trading. And they are usually quoted in two prices, the bid and the ask price. So the bid price is always, at least one pip or one pipet smaller than a lower price than the ask price, right? So the bid and ask price. So the bid price is usually a price whereby traders will submit, to bid for a lower price compared to the market price. And the ask price is the price whereby trader will try to sell higher than the bid price, right? If they intend to go short. So for the spread, right? The spread is the difference between the bid and ask price. So in this example, right, if you take 1.4100 minus 1.4102, right, that will give you 2 pips. But the minimum is at least 1 pip, which is the fourth decimal place of the currency price quoted in this example. Okay, so in this the spread size, Phillip has lowered the spread even further to the introduction of this pipette. Right, so instead of four decimal place, as you can see on screen, we have up to the 5th decimal place, which is called the pipette. So especially for euro dollar, right, during the European and the US trading hours, the spread for you could be 5 to 6 pipette, which is about half a pip, right? So this small spread is especially helpful for intraday traders or intraday scalpers who will go for the small spread and fast action in the market. Right, next I'll just go through the explanation of what margin is all about. So margin is the minimum amount that the trader needs to have in the Forex account in order to initiate the position. So another definition for that is a good faith deposit. And the maintenance margin, right, as defined from the screen here, is the minimum amount that the account can sustain before there is a trigger of the margin call. So in Phillip, we practice initial margin equals to latest margin, so this is the same amount. So in the event if the for the account holders, when the funds is below this latest margin, right, the MT5 platform will highlight or inform or alert the trader that there is insufficient margin and the traders may need to take actions to extinguish this margin call if required. Right, so next I just go through a simple example of how a trader can mentally or manually calculate the profit and loss based on the transaction that they made. Okay, so for instance, this trader deposited 5,000 euro, which is about 6,000 US dollars as an initial margin to control a 100,000 euro dollar contract. So at a price of 1.38. So assuming this trader bought this one contract of euro dollar at 1.19, and then when the price appreciated 1.208, he decided to sell this profit. So when he sell the contract, the profit or gross profit in this case would be about 1,000 US dollars. So you can see from this very simple formula. So just take the exit price, subtract away the entry price, times the contract size will give the profit or loss for the trader. So in this example, the trader have made a ROE or gross return on equity of about 16%. All right, so just take the $1,000 divided by 6,000, which is the account size. Right, this will give a trader a return of percentage of 16%. Right, so in this case, for this trade, the trader has performed 16% return on the equity, which is not bad. Okay, so next we just go through the same example, but instead of the price rising from 1.19, the price for the euro drop from 1.19 to 1.18. So when the trader decide to liquidate these positions, right, this is the outcome. So using back the same formula, right, the exit price minus away the entry price times the contract size will give a negative 1,000 US dollars. Right, so in this case, the gross percentage return will be a negative 16%. Okay, so just bear in mind, this is a very simple illustration. So on our platform MT5, the trader will be able to see the P&L real time, whether is it positive or is it negative, is it in the red or is it in the black, right, be shown on the platform on itself. So this is just to show you how to get derived numbers so that you won't look so confusing when you trade with the MT5 platform. Right, next I'll come to the main topic of the night, that is the breakout trading strategy. Right, so as a veteran forex broker, I understand that finding the right forex strategy can be tough, especially for new traders. So usually when I get questions from clients, they always ask me, so how do I start? Where do I start? How do I know if I found the right trading strategies? Now, considering the hundreds, if not thousands, of different trading strategies in the world, right, this could only get worse when you add in the endless numbers of technical indicators and oscillators. So it gets rather complicated and especially confusing for new traders and beginners. So tonight's session is to introduce both experienced and beginners who are new in this forex trading. One of the more popular trading style, which is a forex breakout trading strategy. So basically, the whole idea of breakout trading strategy is to help traders to make successful trade and hopefully to benefit from the volatility in the market by with our Phillip MT5 trading platform. Right, so what is breakout trading? Right, so the definition for this strategy is very simple, right? First, the point whereby the price action or the market breaks beyond a key support resistance level, right? So the key word here is key support or key resistance level. So it can be a part of a technical pattern such as a channel, a horizontal level, or a trend line. So as price action traders, this breakout, they are part of a very critical component in their trading process, and they help them to determine where the market is most likely to go next, right, in the future. So breakout occurs when the price breaks above a key level of resistance and hits higher. So this is what we call breakout. So the opposite, right? So once this resistance level is broken, it's regarded as next level of support, and the price experience, and this is a price experience a pullback, right? So the opposite of breakout, right, is a breakdown in terms of a bearish market, right? Prices fell, so it breaks a certain key level of support, and the price actually continue to hit lower. So prices break support and it tries to depreciate further on the downside. So once this support level is broken, it is regarded as the next level of resistance and the price experience a short-term price rally. Right, so this is the breakout or breakdown, right, depending on whether you want a long or short. So to avoid confusion, I'll just use breakout synonymously for both on the upside and downside, right, for most of the slide. Okay, so for most of breakout, it occurs right usually after period consolidation. So these are the key barriers that traders will need to look out for to find opportunities to enter the market, right? Right, so before I proceed further, I'd just like to do a quick definition of what is support and resistance level all about, right, for those who are new. So, right, so that we have a common understanding of what is the support and resistance level is all about. So support level is whereby the buying pressure, right, for the currency pair trading, right, is strong enough to absorb, right, to take in all the sellers, right, such that it overcomes the selling pressure and the price doesn't go below this support level. Okay, so this is support level. Right, a very good example is the floor you're standing on or sitting on, right, this is your support level. So in the event with the floor give way, right, the person will drop to the next level below him, right, so this is support level. And for resistance level, right, this level is the level whereby the volume of sellers, right, the supply side outweighs the demand side, right? So the number of sellers outweighs the number of buyers, right? So when that happens, the prices will find it hard to appreciate and go above this level of resistance. So this is the resistance level. So a very simple example is the roof or the ceiling of the house. So this is the resistance level. So if you break your ceiling or rooftop, then you will enter your neighbor's house right on top of you. So this is the resistance level. Okay, so generally breakout trading is used by active traders, right? So take a position during this early stage of the trend. So generally this strategy is the starting point for major price move, and there'll be an increase in the liquidity and expansion in market volatility. So usually breakout traders will look out for this characteristic in the marketplace, and most traders also use the chart patterns and other technical tools to identify the possible breakthrough to the support and resistance levels. Right, so when trading breakout in Forex, it is important, right, for traders to realize that they are basically classified as two main types, right? So you can see it's either continuation breakouts or reversal breakouts. So it's important that traders, when determining the type of breakouts, it helps traders to make a sense of what is actually happening in the big picture of the market. So usually as breakout is significant since they indicate a change in supply and demand of the Forex they're trading. So this change in the market sentiments, right, sometimes it can cause very expensive and extensive move in the direction that they are trading and provides some excellent and outstanding opportunities for traders to capture these massive price actions, right, which sometimes may result in successful breakout trades. All right, so next we take a look example of a continuation breakout. So this is how a continuation breakout looks like. So usually when on a downtrend, prices when they fall or when they depreciate, there comes a time where the period whereby there's after this extensive downside move in one direction on a bearish market, there'll be a phase whereby prices is indecisive, so they are not sure whether they continue to fall or whether their price will rebound. So this occurs when the buyer and seller, they are fighting against each other, right? In this consolidation phase, as you can see at the center screen, consolidation phase. So in this case, the sellers are taking a breather, and the buyers are coming in to mop up the demand at the support line. So prices did not break through this support line you can see on the screen here. So this center screen here is what you call the consolidation phase or the range bound market, right? So prices fall within the demand and the support and resistance level, and the price trade within these two boundaries. Right. So in the event if the sellers decide to take action, right, and it breaks below the support levels, you can see here the supply exceed the demand, right? The seller comes in and push through the buyers, the prices will fall, right? So this is where the seller decide that the initial trend is the right direction to go. So they decide to take more action and to continue shorting the currency pair. So this will push the price down. Again, the bearish market and the price will continue to fall. So this is a result, is what we call the consolidation breakout, right? So in this case, it's a breakout on the downside, right? So it's a consolidation breakout. So it's a continuation on a downtrend, prices consolidate, right? Your schoolers uncertain whether should they continue to fall until traders identify this key support level. And when this key support level is breached, right, prices will continue to fall on the downside. So this is the consolidation breakout for a bearish market. Right, so next we take a look at the second category of breakout classification, and that is the reversal breakout. So the reversal breakout usually start off the same way as the continuation breakout. Right, so market fell on a downtrend and consolidated, and it's confined within this support and resistance level, and market is indecisive. Sometimes the seller win, and then prices fall to the support, and then the buyer comes in to mop up the supply, and the prices rise. So the price action is confined within this resistance on the top and the support level, and it continues after a while, and there's a pause, right? So again, this is the range bound market. All right, until there's a big whale comes in and breaks above the resistance level. Right, so there's a big buyer, a big institution or hedge fund comes in and it breaks above this resistance level, where we have the breakout reversal trading strategy. Right, so the buyer feels that the initial trend is wrong. So again, they push the trend in the opposite direction. So it turns from bearish to bullish. But before that, there's a consolidation phase, right, whereby both buyer and seller were indecisive still. So they're battling out in this support level. Right? So sometimes the seller wins, sometimes the buyer wins, but eventually the buyer wins because price broke up above the recent level, right, as denoted by this green candlestick here. You can see here the middle screen. Right, so this green candlestick is very important breakout entry signal for breakout traders, and then prices are pushes further up and up. Right, so this is the reversal breakout trading. Right, so you can see these two very simple breakout classification. First, we have the consolidation breakout and followed by the second reversal breakout. So the only difference is that after this consolidation for the reversal breakout trader, the buyer decided the downtrend has exhausted. So decide to push the price in the opposite, in the reverse pattern, right, in the reverse direction. So that's why you have this terminology reverse breakout. Right, so hopefully you can see the difference, right, between consolidation and reverse breakout. Okay, so again, it's a game that buyer and seller traders will have to play out against each other. Okay, so the trader with the deepest pocket will usually win. Okay, so this is the forex trading using breakout, consolidation or reversal breakout. So now, by now, hopefully, you can know the difference between consolidation and reversal breakout. So I know some of you are maybe very excited to start trading with this breakout strategy using our Phillip MT5 trading platform. Okay, but I also need to caution you and to highlight to you and to be aware of another breakout phenomena, right? So which we'll highlight in this slide. So just like soccer superstar Cristiano Ronaldo, right, who can perform fancy step overs and fake out traders before he makes his crucial pass or score a goal, right? So the market sometimes can fake out traders and produce false breakout. Right, so this breakout phenomena is what it calls the false breakout, and they occur when the price break past a certain support or a certain level, but it doesn't continue in that direction, right? So you can see on this chart itself, prices consolidate after it rose for a while and was confined in this support zone, and then it tried to break with this green candlestick. You can see from this near the center of the screen here. So you can see there's a false breakout as seen from this indication. Prices did not continue on the breakout, right? So this is what traders will define as a false breakout. Once prices fail to continue in the uptrend, prices failed to continue in the preceding uptrend, and then fell back after it broke through the resistance level, and then it fall back to the support level. Okay, this is what the trader would call the false breakout. Okay, so so my client will ask me how to avoid false breakout. Okay, so there's one way usually I'll suggest to my clients that try not to take the first breakout when you see on a chart. Maybe you can try to wait if the price will go into your intended direction, right? So maybe this will give a trader a better chance of making a more profitable and successful trade. But of course, the downside is this: sometimes when it breaks and it's the actual break and it's a real break, prices will rise and appreciate in very, very fast and rapid succession. So, so the downside, if you wait for traders to wait, right, you may miss out on some trade that see quick, fast movement without any hesitation. It's so fast and furious that prices will just keep moving up. Okay, so this is something that traders, breakout traders, would have to train yourself with, right? Especially if you train to find breakout signals, right? You can use our MT5 demo account and use that to identify breakout trading entry signals. Okay. Okay, so far we covered three very simple breakout classification. You have the consolidation, reversal, and also the false breakout definition and how you can trade them. So some of you must be thinking right now, what happens if there's no consolidation in the price action, right? Say market is trending higher, or maybe market is bearish and keeps falling and falling. So how do traders trade breakout in this kind of situation in a trending market? Right, so in this slide, I'll cover on how traders can use this trending market, right, to trade with this trend line strategy. So what we have here is the utilization of trend line to find breakout entry signals. Okay, so the first way to find a possible breakout using trend line is to draw trend lines. Okay, this is the first step. Draw trend lines on the chart. So as you can see from this downtrend, how do you know it's a downtrend? When market form series for high highs and high lows. For market fall, try to rally, and then sell again, try to rally and continue to fall. Okay, so this is a downtrend. Hope all the viewers will agree with me. This is a downtrend. Market is bearish. So you can see that if you draw the falling trend line or decreasing trend line or declining trend line, depending how you want to define it, the best is try to connect as many crucial points as possible. So you can see that roughly about 3 points that is connected on this chart itself. So the more important critical factual point that traders can connect using the trend line, the more powerful or the stronger it is for the trend line. So just to show the highlight to trader that the trend is strong on the downside. Okay, so this is a downtrend. So drawing a trend line is best that trader can at least connect two tops or at least two bottom if it's an uptrend. Okay, so the more tops and bottom the trader can connect, right, the stronger with the trend line. Okay, so this is first step, finding the trend line. So once the trend line is found, well, traders can use this trend line to their advantage if they want to use the breakout strategy for their trading methodology. So when the price approaches this kind of trend line, okay, there's only two things that can happen, right? So either the price bounce off the trend line and continue on the preceding trend, or the trend will break through the trend line. This will cause a reversal, right? Whether from bullish to bearish or bearish to bullish. Okay, so these are two things that can happen when the price bounce on the trend line. Either you continue on preceding trends, or it can cause a trend reversal, right? So as you can see from this chart, right? So by connecting on the bottom, right, the trader connected at least 4 points before the fifth one, which it broke. Right, so you can see initially on the second connection, the prices touches the rising trend line and then it bounce up and continue on preceding trend and prices appreciate further, right? Pull back again, right? Didn't touch the trend line but appreciate further, and then a third try to break, touches again, and then kind of consolidation a bit, but it's still moving slowly on the upside until the fifth one whereby it touches the trend line and then it breaks below this trend line successfully and price continue to fall and depreciate on the downside. So I can see that there's two very important price action behavior that the trader need to be aware of. This what does the price action do when it touches trend line, whether would it continue on the preceding trend. As I see initially, the prices would rise, right, touches and rise until it, whereby the higher it goes, right, the harder they fall. So on the fifth try, it broke the trend line and then prices fell and drop on the downside. So for breakout traders, you wait for the break on the downside if they want to short for this case. Right, so they take short position around the breakout on the downside, where the red candlesticks is the entry signal for breakout sellers for this case. So in this case, you can see that the supply exceed demand. So what it means is that the number of sellers may exceed the number of buyers, or those who are buying all along on the upside, right, when the price is rising, have turned short, right? So they're taking profits as a result. When the small people selling, the price broke below this trend line and prices continue to fall. Right, so price turned from bullish and reverse and turn to bearish. So this is a trend line breakout, right? So as a result, right, prices turned from bullish and prices fell as a result of this trend line breakout. Okay, so another way to trade trending market breakout opportunities is to draw trend channels. Okay, so this is how a trend channel looks like in a chart, right? So if you know how to draw trend lines, then trend channel will be a piece of cake, right? So how you draw trend channel is that you just copy the same trend line and paste it onto the opposite direction, right? So drawing trend line is almost the same as drawing the drawing the trend channels is almost the same as drawing the trend line, right? So we just need to copy this trend line. You can see below where it connected about 5 to 6 points, right? If you include this one on the top right corner, then it's 6 points, and then you just copy and then paste it. So on the MT5 platform, you can just copy and paste this trending uprising trending channel, right? So you can see again when it prices touches the trend line, two things happen: either it bounce off and continue pursuing trends, right, or it will break through. So in this case, when it touches on the upper boundary of the upper channel, right, prices will pull back and trade within, or it touches the lower channel again. Okay, so this is the rising channel. So with the rising channel, right, the breakout trader can decide whether do you want the long or short. So in the case if the price break below the lower channel, then they may take a short positions. But in the case if the price and breaks above the upper channel, right, which it tried right on the second try, right. So if usually is denoted by a long green candlestick, this could be a uptrend on the upside because it broke the upper channel. Then the breakout trader may decide to take a long position for that case. Okay, so this is the channel breakout strategies, right? Right. So channel breakouts are useful for breakout traders because, right, it helps the breakout trader or price action trader to find or identify the possible breakouts in either direction, whether on the upside or downside. So if the price break above the upper channel, then breakout trader will take a long position. But if it breaks below the lower channel, you can see from this simple chart, then breakout trader will take a short positions. Okay, so the signal the trader will look for is a red candlestick that breaks the lower channel. So if they decide to long, then it has to be a green candlestick that penetrates above the upper channel. Okay, so this is the signal that traders will look for, the red candlestick for shorting. All right, so this is a low, 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 low. So in this case, when they break this major upper channel, what happens if the trader missed out this big red candlestick here? Right, the second option is that they can draw a second trend line. You can see here, if you draw an illustration, a very simple trend line, you can see you can connect 3 points here. And you can see this red candle is the second entry price in case you fell asleep on the first entry, and then the MT5 just alert the trader that, your support has been breached, your trend line has been breached, and then you wake up and then you can take another shot over here. Or for those who are more aggressive, they can short the position initial on a downside break, and then on the second break, you can take up, add in more position to short on the second break, and further downside, you can see here near the bottom right of the screen here, where I can see that if you draw a minor trend line, rising trend line, you can see that connects about 2 points, the point on this green candlestick and this green candlestick. And then this red candlestick may breaks above on the downside. So this is the third option that the trader may consider to add position on the downside, right? So hopefully the price will continue to fall, and then the trader can maximize the profit on the downside. So these are scaling in positions for traders who are more advanced, right, with trading with these breakout strategies. Okay, so this is the channel breakout strategies, right? So hopefully by now you have the understanding of how to trade when market is not trending, right? Look for consolidation or reversal, And then in the trending market, you can use a very simple tool like a trend line, right? When market is in a bullish mode, right? To look for whether it's a possible trend line reversal. The most important, most crucial part is that the trader has to understand the price action behavior. When the price touches the trend line, there's two things that can happen: whether the price will rebound and continue the preceding trend, or it breaks below the trend line and cause a trend reversal from bullish to bearish. You can see from this chart itself, or from bearish to bullish if you decide to long. Okay, so the last strategy we just touched on is this trend line channel strategy itself. So it's just extension, right? The elaboration on the trend line, so it covers both the upside and downside. So for traders who are more flexible, they can use this trend line channel to capture possible entry on both the upside and downside. Right, so with that, just like to repeat myself. Right, my name is Stephen Ong. I'm a Forex broker with Phillip Futures. So I'm your presenter for tonight. So in the event if you choose to open an account with me tonight, right, scan the QR code and decide to embark on this trading journey with me, can help you to strategize and develop a custom by using MT5. Right, happy to strategize and develop, customize your personalized trading plan. And for those who are more active, right, I will usually send SMS or WhatsApp or WeChat, like daily trading news, right, that help you to identify possible trading opportunities for more active traders. And for those who are new or even experienced trader, I can also help you coach you and provide trading guidance on how to use the MT5, right? All the different functionalities and features, more advanced features. For those who are more active in futures, you can use our Nova platform, right? So if you decide to open an account tonight, right, I'll help coach you and provide guidance on how to trade with this MT5 and Nova. And also extra service will be to review your portfolio and even your stocks, right? You might want to use CFD or Forex or futures to hedge your portfolio, help you to strategize what are the suitable contracts to hedge your portfolio. And if you're busy working at daytime, it can help you to execute and monitor your positions. And if there's any call level, I can call you to inform you or identify levels that you may find interesting enough, maybe as an entry or exit level. Right, so for those who decide to embark on this trading journey with me and scan the QR code and sign up new account before Christmas, right? So you will receive this intensive Zoom one-to-one coaching session on the advanced breakout trading strategies, right? On event that accounts is funded and activated. So we do this session on Zoom. So in this session itself, I will teach trader on how to identify and trade with more complex and more sophisticated price action patterns, such as double top, double bottom, head and shoulders, triple top bottoms, triangles, symmetrical triangles, symmetrical triangles, and all these wages, and etc. etc. So these are, because of time constraint, I'm not able to squeeze everything into the slides. And also I'll teach traders how to measure the strength of breakout so that reduce the possibility of being trading false breakout, taking false breakout trades, right? So these are crucial for traders who want to utilize breakout strategies, right? So do remember to sign up a live MT5 account after this session to enjoy this free Zoom trading session with me. Okay. So before I proceed on this MT5 demonstration, again, I would like to highlight that Phillip Futures is the first company, right, to introduce the MT5 platform to both new and experienced traders in Singapore. So MT5, as you know, is the most advanced trading platform available in Singapore. It's completely free to use, right, with zero commission transaction costs, and it comes equipped with all amazing trading functionalities and features, and it's also the most sophisticated and user-friendly platform ever introduced in Singapore, right? So that's why this platform is conceived and designed especially for retail traders. And the amazing thing is that it's absolutely free. So just remember to scan the QR code right after this live MT5 session, right, and download a copy from our website and try out this platform either through your mobile or through your desktop. So hopefully at the end of this webinar, we are able to start on the win-win business partnership and share many successful stories on trading to come. Okay, so this is the MT5 demo for MT5 platform. Okay, so so I'll just touch on the three types of these of the breakout strategy which I cover in the slide. So you can see this is the dollar-yen currency pair, right, hourly chart. Okay, so on this chart itself, if you understand what I've covered so far, this is a reversal breakout. Okay, how do you know if this is a reversal breakout? Right, prices fell from the left side of the screen. It fell, right, prices fell to a rebound, fell, right? So this is a downtrend right until the 18th of November around 1 p.m. And then, from there you can see that prices try to recover and then fell again. So from this we can draw a resistance level here. Okay, so resistance level is somewhere around 103.9. Okay, so you can see there, this is your resistance level. Then the support level will be somewhere around here. Okay, so just remember, support resistance level is not a straight line itself, it's a zone, right, a region whereby the price action will trade between the buyer and seller. So you can see that, it's quite obvious in this case, the prices has been stuck, right, confined to the support and resistance level within this 103.9 to 103.66, right, for at least about 2 days until this green candlestick. You can see a green candlestick, right, breaks above the support, the resistance level at 1.0390. Okay, so this green candlestick is the entry candlestick for breakout traders. Okay, so this is a possible breakout on the upside. Prices breaks above and continue to rise. So the next level is to see whether the price will continue operation on the upside. Okay, so you can see this is a very simple reversal breakout, right, from bearish to bullish. Okay, so this is a reversal trading. Okay, so the signal to look out for is this green candlestick for turning long, right, from short. Okay, so next short pattern I'll look for is this, right, so you can see from this is the UK oil CFD. Okay, UK oil CFD. So right, so you can see from here, I hope everybody agrees with me, this is a uptrend chart. Okay, prices are rising on the uptrend. So it's a series of higher low, higher low, and prices rise. So you can see that initially, right, prices over here is a bit choppy, right, but over here near the center of the screen, you can see that this is something that we should cover on, something like consolidation phase, right? So how you know whether it's consolidation, you just need to draw a support resistance level. Okay, so you can see that it touches 2 points over here. The more point it touches, the better it is. But of course, these are the two major points here, right? And the support level will be somewhere below here. Okay, so around this 2 points is where the support level is. But of course, if you want to be very, very microscopic, you can draw even more lines, right? So this could be a minor support. So broke this level and then it breaks above. So, and then if you want to be really microscopic, right, you can see these are very minor support levels, right? So if you are trading on a very microscopic level, you can see the prices break above, right, and then it try to pull back. Okay, so this could be considered as a false break, right? If you trade the minor level, chances of false breaks are higher than you trade the key support and resistance level, right? Remember the word is key support and key resistance level. Okay, so the word key is very important. You can see here when it breaks above the major level, the major or keys resistance level, prices appreciate. Okay, it tried to pull back, but it didn't go below the resistance turn support level. So in this case, prices continue to rise and continue to appreciate and go further. Okay, so you can see this is the example of a consolidation breakout. Prices rise initially from bottom level screen and then consolidated for about 2 days, and then it breaks the key resistance level. Okay, the word is key resistance level, and then prices rise. But if it breaks the minor resistance level, you can see that this is what you call a possible false break. So sometimes those who take a big position for this, they may end up cutting loss, right? Take a loss, and then eventually you see a price rally up in the direction that they want to go. Okay, so the thing is, sometimes you need to stagger your not just your entry price, but also your positions. Try not to take too big a position if you're trading breakout, right? Take a small position to test the market, right? So that you got the stomach to withstand the volatility of market, and then when the prices appreciate in favor, then you will feel so guilty for missing out, right? So you don't have this FOMO reaction to it, right? Fear of missing out, right? So this is the trading psychology for this case. Okay, so this is the consolidation breakout, right? So hopefully you can see the difference between the reversal and consolidation breakout. So the next breakout strategy I want to touch on is the trend line breakout. Okay, so you can see this is the Aussie 15-minute chart. Right, so you can see the one I want to touch on tonight is the trend line. All right, so you click on this icon, draw trend lines, and see when you shift your cursor to this slanted line here, you will show highlight you is a draw trend line icon. So what you can do is you from the bottom left of the screen, you just click on it and then just drag to the top. So you can see you can connect at least 3 points, right? So what happens? Remember two very important price action behavior. When prices touch the trend line, there's only two things that can happen. Either prices will rebound and continue on the preceding trend. So what this tells the trader is that the buyer are still buying. They're only buying on pullback. So prices pull back to the trend line, and traders will add in more positions. So that's why the prices rally up. And then you take profit, and then prices fell, and then you add in more positions, prices will rise again. And then they take profit, and then prices fall and touch the trend line, and then they rise again. So the higher they rise, the higher the price, the further they fall. So once on the fourth touch, right, the second phenomenon applies where it breaks the trend line and prices fell. So you can see on this, supposed to be a red candlestick. Okay, so this red candlestick will reach to this trend line, and now this is a sell signal. The traders will have been buying for the last 3 try will have turned short and prices will fall. Okay, so now is on the upside. Okay, so this is the trend now breakout. So of course, remember that I said if you extend the trend line methodology and use this as a channel, then you connect this 2 point will give you a channel trend line. So you can see that the price action for this first uptrend is confined between this bottom channel and the upper channel. All right, so this is the channel breakout strategies. Okay, so you can see now over here, right, live action going on here. So it's you can see that it just broke through the upper channel trend line, the minor one, right, because the price action is smaller. So we broke through this with this green candlestick, and prices is risen on the upside. So now the $1 million question is, will the price continue to rise or will it pull back? So you can see now this upper channel trend line has now become your support level. Okay, it has become support level. Okay, so it broke above. So now it's whether when it touches this trend line, will it bounce up or will it break through and turn from bullish to bearish? Okay, so for more information on this, right, please sign up for a live account and touch on the advanced trading breakout strategies if you want to know how to trade in a more advanced breakout trading strategies. Okay, so this is the time constraint. I can illustrate to you how to trade the most basic and simple breakout trading strategies for both new and experienced traders. Okay, so this is the MT5 demonstration, right? MT5 demo. This is the MT5 demo. Okay, right. So to open MT5 account, so please read through carefully our product information sheet on our website, the terms and conditions, our MT5 conditions, the risk disclosure. Then all this form can be obtained from our website or right on phillipfutures.com. Right, so to open the MT5 account, please scan the QR code on the screen, or you can drop me an email, right, regarding tonight's session. Right, you're gonna keep in touch with me. Okay, so once again, I'd like to thank for everybody for joining us for this live webinar. Right, scan the QR code for demo account or for upcoming webinars. Right, so these are the QR codes. So next, I'll proceed to the Q&A session. Is there any questions so far? So if you have questions, please type into the question box. Any questions regarding tonight's session? Okay, so well, there's no question so far. Okay, I'll give you 10 seconds. If you have any question, just don't be shy, type into the question box and I'll try to answer your question. All right. So for those who are still waiting for the question to appear in the question box, okay, let me check the questions. Okay, let me check questions. Okay, okay, the first question is, what is the commission rate for trading Forex with Phillip Futures? Okay, this is a very good question. The answer is zero commission. Okay, there's no commission rate. If you trade to the MT5 platform, okay, we trade to the MT5 platform, right, used for trading FX, then there's zero commission. Okay, zero commission. Okay, so what are the products available for trading in MT5? Okay, you have the biggest financial market, right? The Forex market, right? Basically, we have almost all currency pair that's tradable available on our platform. Then you have the commodities like oil, which you just seen, right? You just seen a couple of minutes ago in the platform, the UK oil, you have gold. Okay, and you have Bitcoins, right? You have Litecoins, you have Ripples, and okay, so you have stock CFDs, right? Like you want to buy DBS CFDs, right? OCBC, Capital Corp, SIA, and also Facebook, Apple, Nasdaq CFDs, or NYSE CFD, like Walmart, Apple, right? IBM, Tesla, right? Etc. Etc. All these, right? So they are, but basically these are the more popular products that's available in our platform. Okay, can MT5 be trading local and international stocks? Okay, like I mentioned, MT5 from Phillip, we offer local stock CFDs like DBS, SIA, Capital Corp, right, Capital Land, etc., etc. So mostly are the blue chip companies. And for international stocks, the NYSE and Nasdaq, right, selected counters, right, more popular would be like Apple, Facebook, Tesla, right, the stocks with a high liquidity, right, so these are the stocks that are available. So for more information, you can scan a QR code, download or demo account, so all the counters are available in the platform. right? You can even download, right? If you trade to iPhone or your smartphone, you can download and immediately right now and check it out, right? Okay, so what is the requirement to open MT5 account? Do we need certain qualification? Can trade all products? Okay, the requirement to open MT5 account is that, okay, first of all, you need to qualify with this CKA-CRR, right? That means you need to have trading experience, right? You did like a few 6 trades in the last 3 years, or you have a necessary qualification, whether you have worked in the financial sectors and all that, right? So all these are requirements. You can visit our website and for more details. So once you pass this requirement, then you can trade all the products we just mentioned a few minutes ago, right? So what are the requirements to open MT5 account? So once the account is open, right, if you fulfill the criteria specified by the regulators, right, your account will be activated. Once you funded in, you can start trading. Okay. So I have shared trading account with Phillip Futures. Do I have to open a separate account for MT5? Yes. Okay, because Phillip Futures we function separately from Phillip Securities, so MT5 is under Phillip Futures. So if you want to trade Forex under MT5, you need to open a separate account for MT5. Okay, so are there financing charges for overnight CFD trade? Yes, there's financing charges for overnight CFD trades on MT5. So the charges itself will be shown on the platform MT5. So once you hold your position overnight, right there, it will show you either a positive interest or negative interest depending on the currency pairs or the contract you're trading. Okay, so that's why download the demo account, try it out. You can see the financing charges there, right, on your handphone, right, if you're trading through handphone or to your desktop, right, or to your laptop. Okay, so I think this will be the last question. What is the fee per trade? Okay, this is the same question as the first question. Okay, what is the transaction cost? Okay, so just like to uh, repeat myself again, re-emphasize, okay, it's zero commission per trade. Okay, zero commission. Whatever trade you do, there's zero commission. Okay, so there's no commission charge on the trade that you do through Forex or for CFD or for the commodities through the MT5 platform. So it's a zero commission charge platform. Okay, so with this, the final question. So in case if you still have any question, just drop me an email. I'll show you my email address later. But I think that's all the time I have for today, for tonight. So once again, I'd like to thank everybody for being such a wonderful audience. Right. So the link for tonight's recording will be made available in our follow-up email to you tomorrow. So if you have any questions on the webinar, on anything that I touch on or regarding MT5 or trading strategy, I would like to get started, please reply to email and we'll get in touch with you. So this is Stephen signing off. Once again, happy trading and look forward to seeing you again.